says it will continue with its $85 billion a month bond buying programme following a two-day policy meeting. The Fed also indicated it could increase bond purchases if data in the coming weeks and months shows falling employment levels, and if inflation falls short of the Federal Reserve predictions. This could also become a key factor for an increase in bond buying. Currently, inflation has moved below the Fed's 2% target. In a statement, the Fed said fiscal policy is restraining economic growth. Inflation has been running somewhat below the Fed's longer-run objective. Fed Chairman Ben Bernanke has been urging the US President and Congress to form a budget plan that does not make too many cuts while the economy remains fragile, but still reduces deficits in the longer term. As the Fed continues its bond buying programme today, European Central Bank kept interest rates at 0.5% due to a flagging Eurozone area marred in recession. There are several factors which could imply inflation pressures have withdrawn over the past few weeks. Oil, cotton, sugar and gold future prices are downward from last year. Also, yields on 10-year US Treasury notes, which can be significantly affected by inflation, have fallen to 1.638%. On Monday, the US Commerce Department reported consumer prices fell below the Fed's 2% target, after rising just 1% in the 12 months until March. In April, Eurozone inflation was recorded at its lowest level in more than 3 years, at 1.2%, falling below the ECB's goal of just less than 2%. More economists are now forecasting Eurozone countries will shrink for a second consecutive year, and growth in developing economies such as China is showing reduced signs of rising after slowing last year. Bruce Kasman, chief economist at JP Morgan Chase, said, Economics 101 tells you that if you have subpar global growth for a while, you're going to get lower inflation. There is still more downward pressure. That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates. Goodbye for now.